Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Asia podcast. I'm Doug Krisner. You can join Brian Curtis and myself for the stories making news and moving markets in the APAC region. You can subscribe to the show anywhere you get your podcast and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
So China started its most expensive military drills in a year around Taiwan, and Taiwan scrambled jets and put its own missile, naval, and land units on alert yesterday. It all comes just a few days after Lai Ching-te was sworn in as the new president for Taiwan. And so joining us for some discussion of this is Rebecca Choong Wilkins, Bloomberg Asia government and politics correspondent. So it sounds a little scary, but then this is a dance that we've seen in the past between these two.
It's certainly a dance that we've seen in the past. And it is worth saying that actually, by and large, for the last year or so, Beijing has been quite restrained in its activity around Taiwan, particularly during, for example, the Taiwan elections themselves. They haven't been extremely aggressive in the way that we saw, for example, when the then Speaker, US Speaker Nancy Pelosi, visited Taiwan back in August 2022. I think the main difference that experts have pointed to between the Chinese response to Pelosi's visit and this time round, for example, is that we have seen more of these military drills and activity around closer to the mainland Chinese shore, so in the waters around Matsu, Wuxia, Kinmen, and so on. And so it's sort of an escalation of that grey zone area, a part of how they try and sort of increase some of the areas in which they are carrying out exercises.
What about the intensity around this show of force? Is it more or less than what we have seen in the past? The number of ships involved, let's say, as an example.
Well, it's sort of by and large similar. I mean, it depends specifically whether you're looking at ships or specific types of activities and so on. But the sort of we've never seen Chinese military held so many exercises in so many locations around Taiwan for the last year. So it's sort of the expansiveness, which is, I think, more of note this year. And as Brian was saying, this is really very much about sending an explicit signal to Lai Ching-te, to the ruling power about the punishment for what they perceive to be separatist acts. They also blasted Lai Ching-te's inaugural address, for example, accusing him of sending dangerous signals of independence.
Yeah, it's one of these things where you have a feeling that, I think you even mentioned it, setting the tone a little bit, China is for Lai Ching-te. But, to be honest, he's been pretty reasonable in his approach, at least over the past many months in the run-up to the inauguration and after the election. And I wonder how much difference there really is between Lai Ching-te and President Tsai Ing-wen.
Yes, I think that's a really good point. And in some ways, he has also been quite sort of careful and muted in some of his own language as well, something of a sort of continuity candidate, particularly, of course, when it comes to this issue around China. He has also, it's worth said, sort of emphasized several times his desire to maintain the status quo, to maintain the peace around the island of Taiwan. So it's not to say as if that it's not to sort of imply that he has been ratcheting up language per se on his side either.
All right, Rebecca, thank you so much for making time to chat with us. I know it's a busy day for you in Hong Kong. Rebecca Choong Wilkins, a Bloomberg Asia government and politics reporter, helping us understand a little bit more about Chinese military drills around Taiwan.
China, Japan, and South Korea are set to hold their first summit in more than 4 years. And joining us now in our studios is Minmin Lo, Bloomberg China correspondent. Minmin, thanks very much for joining us here in the studios. So these three countries are not easy partners. And of course, there will be a kind of quiet or invisible participant, I suppose, the United States. Let's talk a little bit about what you see as some of the key possible deliverables.
Yeah, I think chips is going to be top of the table. As you mentioned, these are very tough relationships to navigate. They haven't had a summit since 2019, and that's partly because of the pandemic, but also because of resistance among these three countries to meet, partly due to this warming relations that Korea and Japan has with US. But I think what took on increased urgency for Beijing to get these meetings going this time is that Korea, Japan, and the US held their first trilateral summit in Camp David in August of last year. That really set off alarm bells ringing in Beijing because those three countries are affirming commitments to each other's security and economy. So Premier Lee, he's going to use this trip to really shore up China's security. And I'm talking about both military and economic security, because Washington has been courting Korea and Japan to increase their limits of chip-making equipment exports to China at a time when China already faces this wall of restrictions from the US, from the Dutch, and now Korea is the largest source of chips for China, and Japan is the largest source of silicon wafers for China. So a lot is at stake here.
It's kind of interesting, too, the timing. We just had the inauguration of the president of Taiwan, and now it was only earlier yesterday that China escalated military exercises around Taiwan. Do you think there's going to be much in the way of conversation around activity in the South China Sea, particularly as it relates to trade routes in and around Taiwan?
Yeah, definitely. There's going to be conversations about security issues in both the East and South China Sea because, again, Korea, Japan, and US, they have been holding these joint drills in the East China Sea where China has disputed territorial claims of Japan over the Senkaku or Diaoyu Islands, depending on who you speak to. They have different names for these islands. And as you said, Taiwan is in focus as well because Japan had sent its largest ever delegation to the inauguration so far, to President Lai Ching-te's inauguration. And obviously Beijing is angered by it. We saw that, huge military drills yesterday. That's going to be on the table. And then North Korea as well, the perennial issue that's a concern for South Korea with the missile program, as well as these allegations of that weapons for aid exchange with Moscow that both Pyongyang and Moscow have denied. But you can bet that Korea and Japan, they're going to push Beijing to really use its leverage over Kim Jong-un to kind of rein Pyongyang in.
Yeah, that's the interesting thing is that, we often think about countries in Asia getting caught in the middle between the two superpowers. But in some ways, it gives them, South Korea and Japan, some opportunity here to extract some benefits from both sides. In other words, kind of playing one off the other to their own benefit.
Yeah, exactly. And we kind of see this geopolitical dynamics really shifting fundamentally in these last 4 years since the three countries last met. Because if you look at trade, China is still the largest trading partner for Korea and Japan. But if you look at new investments, that's already declined from Korea and Japan in recent times. And Korea's exports to the United States had overtaken its exports to China for the very first time in almost 20 years. So that's quite a big shift there. And I think Beijing will be using this trip to really kind of, convince its neighbors to realign their foreign policy away from the U.S.
Well, when you mentioned trade, one of the things that Chinese President Xi Jinping mentioned when he was in the U.S. at the end of last year was the fact that foreign direct investment from the United States is critical. Is he making the same case to South Korea and Japan that China essentially needs a lot more in the way of investment?
For sure. As I mentioned just now, you look at the numbers, new investments has been declining, I think, the past couple of years. And China's domestic economy is not really revving up fast enough with the property crisis. Domestic spending is not really picking up. So China is really relying a lot on export-driven growth and also from investment from foreign companies coming to invest and expand in China. So that's going to be a pitch that Premier Lee will want to make to his counterparts in Korea and Japan. And look, China has this saying in Chinese, it's called 唇亡齿寒. It translates to basically your teeth will be cold if your lips die. So what it means is really that your closer neighbors are much more important than your allies far away. And I think that's what Premier Lee will be there to tell his counterparts in Korea and Japan.
So we talked a little bit about the U.S. in this discussion, and I mentioned that they were an invisible player in all of this. To what extent is the U.S. putting pressure on South Korea and Japan to confront China? And to what extent do the countries either embrace or reject it?
Yeah, I think that's really a big factor in this relationship, and time is of the essence here because Washington is said to be pushing to reach a deal with Korea on those curbs on semiconductor exports by June before the G7 meeting. And then after that, the Korean and Japanese leaders are said to be considering a trip to the US to have a summit again with President Joe Biden that's possibly taking place in July. So right now, this trip is really critical. There's a lot of negotiations going on between Beijing, Korea, and Japan to really kind of, shift, get them to reorient their policy away from the U.S. at this time.
Are we to read anything into the fact that President Xi is not in attendance, that instead Premier Liu Choong is going in his place?
Yeah, that's also something that's quite interesting because he will be meeting with, Premier Lee will be meeting with Prime Minister of Japan and the President of Korea. But Premier Lee is kind of like one rank below President Xi, and he's kind of taking this meeting in President Xi's place. I think that also speaks to the souring relations that has kind of taken place over the last 4 years because China and Japan, their relations have not been going very well, especially after that nuclear wastewater dump into the ocean. China has been placing the seafood ban on Japan. Korea as well with the chips, threatening to kind of hold back on these chips. We saw Korea just recently announce, I think it was $19 billion in funds to bolster their own domestic chip supply chain. So there's been this race, intensifying chips race across the globe. And that's something that's very sensitive.
High stakes, very high stakes. Minmin, thanks so much for coming into our studios and for providing some insights on what to expect from these three sides here as they get ready to meet. Minmin Lo, Bloomberg China correspondent. We're joined in our studios by Sean Taylor, Asia CIO and Portfolio Manager at Matthews Asia. Sean, thanks very much for coming into our studios. Pleasure to see you again. So I'm curious, do we want a strong growth profile here for the United States and the global economy, or do we want slightly weaker data so that we can feel comfortable that inflation will recede?
Well, if we want it, it's not happening. The growth profile is really expanding. I think you're beginning to see some real cyclical pickup across. Not just the US, but across Europe. And finally, we're seeing some pickup in Asia and in China as well. So it's a pretty good environment, for risky assets. But it's obviously going to be, disappointing for those who think that rates will be cut sooner.
What is it? Does it create a bit of a nervousness on your part? I mean, the volatility may be in store here because every day this push-pull on will the Fed cut before the end of the year? Will they remain steady as she goes for a while longer? What concerns you the most right now in the current environment?
Well, I suppose the three main things were, one, what's the implications if the Fed doesn't cut this year? And that has a bit of an implication on Latin America and certain parts of Asia that are relying on rates to be cut. The second is what happens with the yen, because that's putting pressure on other currencies. And, the volatility there has not been that good. And then the third is the cyclical pickup in China. And have people got enough money in China, in a market they've ignored for a long time?
The tricky thing is that if we do see a little bit of a weaker environment and inflation coming down a little, and the Fed were to start cutting interest rates, although the dollar would likely weaken, and that might take some pressure off of Asian currencies, but, you might get this almost like melt up in risk assets, right? And, that creates its own sorts of difficulties.
Absolutely spot on. If you look back in history when you've seen what we call a pickup in sort of global growth and leading into better earnings, and these are more cyclical earnings as opposed to structural from AI, etc. We've never had Fed cut. It's always been hiking to that.
So can we just sort of ask for gardening leave for the Fed? Can they just take like about 6 months off and just don't do anything stupid?
I think so. Well, I suppose they could restrict the balance sheet and restrict some of the. They they could cut some liquidity out to slow down some of the growth. But it also doesn't. It also seems it doesn't matter who will be the president in terms of fiscal policy will continue, and the market will be, flooded with more liquidity.
So where are you finding opportunities? Given everything that we're talking about right now, are there things that you find attractive in the current market environment?
Yeah, I mean, in terms of the APAC region, we think that investors are broadening out. Obviously in the US they're broadening out from the top 7 to the wider market. We've seen quite a decent recovery in Europe. Japan continues to be a very interesting story because the earnings are delivering, and actually the weaker yen does help. Even though Japanese companies aren't as sensitive to yen, but it does help the sentiment in the market. But investors buy earnings, and earnings are delivering. In Korea and Taiwan, we're getting the same. We're really seeing the macro data improve. The export data is improving. Maybe the weaker won is helping. You've got the AI structural theme happening and some cyclical themes happening. So hardware, semiconductors doing very well. You've still got India looking okay. I mean, it's sort of consolidated into an election. But I think after that, the Indian story is pretty good. And then finally, in Asia, we've actually got China looking better, or better than it has been in the last 4 years. And I think some of the measures that were announced on Friday in China are quite positive, and they all help global growth.
Let's talk a little bit about Japan, because we did get some national inflation numbers today that were a little softer. Good news to some, but maybe not such good news to the Bank of Japan. Obviously, the Bank of Japan is still kind of hoping to get a little bit, to be able to normalize policy and get out of this ultra loose monetary policy. Do we want a little higher inflation, or do we want it just to stay steady there?
I think we want to stay steady. I mean, I think the problem is it's getting the companies need to start to put wage growth up, and I think that's probably going to be the main sort of driver of consumption. I mean, I think the market at the moment is factoring in 2 interest rate hikes. I expect it's only going to be 1. However, we did have an ex-BOJ policy member today saying that it could be 3, but I think it's going to be slow. But when we had the first hike in Japan, they also bought in. There was also more liquidity put in. So in one way they hiked, but on the other way they kept the liquidity going. So, I think I'm more focused on the liquidity side, on the QE side in Japan, which is probably driving growth, and the actual level of interest rates.
Okay, I give you about 15 seconds. What do you like about Japan from an equity standpoint? Quick.
Domestic earnings, and also some of the cyclical side that's picking up.
A+. Thank you very much, Sean. Nice, quick, succinct answer there. Sean Taylor, Asia CIO and Portfolio Manager at Matthews Asia. We look at markets now with Quincy Crosby, Chief Global Strategist at LPL Financial. Quincy, thank you very much for being with us. So a little bit of a sell-off here in the market today. The market will show us in a day or two that good news is indeed good news, not bad. True or false?
Well, we had NVIDIA, which is certainly good news, but we also had the S&P Global flash report. And that was good news, except for one thing, which was bad news, really bad news, and that was that prices are going up, and they're trying to pass it along to customers.
Where does that leave the Fed?
That leaves the Fed scratching his head and wondering, when is this going to end? They've got a report coming out next Friday, which is their supposedly favorite indication for inflation. That's the Personal Consumption Expenditures Index. If that comes in cooler on the super core, this will be a catalyst for the market. But what you had now is a market that was overbought to begin with. And obviously, NVIDIA, came in just fantastic top-bottom guidance, but you couldn't fight. It showed that you could not fight that prices paid data. The market just saw that and said, "Are we really going to see a rate cut this year?"
Yeah, we did see UBS, David Lefkowitz, raise his S&P 500 year-end target to 5,500 from 5,000. And I raised this because he cited four key positive drivers: solid earnings growth, disinflation, the Fed pivot, and surging artificial intelligence investment. So it's just another reminder that, yeah, maybe disinflation is a little in question here, although, we have had a lot of different data points to digest. But on balance, you do have some good news there. So is that how you break it down, Quincy, or do you have a couple of metrics that mean more than anything else?
No, we do that. I mean, we're never bullish nor bearish. We're always pragmatic, and we're very conservative with a small c in the way that we invest. What we do see earnings holding up, and we also see, for example, other sectors that we've gone long and overweight. For example, industrials. So it isn't just about the big seven names or six names, whatever, but the industrials are doing well. Financials have also done well. The question is, can they continue to do well alongside the mega tech when the market believes that that's where you need to go? If things slow down, what we know is that money flows directly into those big tech names because, as a defense mechanism, with their strong balance sheets, their ability to make money, regardless of the environment, perhaps less, but at least safe. Despite the fact that they were initially characterized as long duration, that has sort of evaporated. So again, it has been nice, I would have to say, that we have seen breadth pick up in the market. And as I said, we went long industrials, which we feel very comfortable with.
Hey, Quincy, when the year began, would you have bet that the American economy would have held up as well as it has in the face of higher interest rates? I mean, this is pretty stunning.
It is stunning. But what we do know is that, we lived with these kind of rates for many years. What changed was that many of us in private equity firms, venture capital, folks with mortgages were able to go in and buy things at very low rates, almost sometimes negative rates. And then suddenly you jump that quickly. And that jump really has been difficult, but there's still, at least in the consumer side of things, a cohort that has their houses, they have pensions, they have money, and they bought their houses with a very low interest rate. They don't want to leave those houses. They're there. They want to wait. But that group still has money. Those are the baby boomers. And that becomes difficult for the Fed because the Fed is watching the lower wage earner under tremendous pressure. You've heard Chairman Powell mention it so many times, not just in this period, but before COVID, when he actually said, we are going to do whatever we can do to get this group to have jobs that pay well. Well, they got the jobs, but the inflation, the higher credit rates are hurting them dramatically. So the question then becomes, would he be poised to cut rates if this group becomes even more embattled with higher rates?
Yeah, it's a little bit of a conundrum because you know that they would like to support jobs, but they certainly don't want to cut rates too early and have inflation spike back up again, because that hurts the little guy probably just as much as job losses. So it's a little bit of a tricky environment. But then, we're trying to invest money, and we're buying companies, and so let's talk a little bit about how companies are faring, not so much the average consumer. How are companies faring in your view, and which ones do you like?
Well, they're faring very well. That is what, outside from the U.S., global investors always point to about the U.S. The companies know how to manage. They watch their operating margins. And when those margins deteriorate, they are very fast to cut costs. And actually, that's where they start cutting labor. They typically go right there because that's usually what they have to start cutting. Capital expenditures come down. But when we look at through this earnings season, the margins have been healthy. The companies have done well. They've surprised to the upside. And again, I mean, we have to be pragmatic about it. The big mega tech names are responsible for the major portion of earnings in the S&P 500, and they've been doing well. Even when they're bad, they do well.
Quincy, 30 seconds. The market that is your most favored in which to put capital to work offshore right now is?
Japan.
That was quick.
Yeah. Quincy, thank you very much for joining us. Quincy Crosby, Chief Global Strategist at LPL Financial.
This has been the Bloomberg Daybreak Asia podcast, bringing you the stories making news and moving markets in the Asia Pacific. Visit the Bloomberg Podcast channel on YouTube to get more episodes of this and other shows from Bloomberg. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.